Good evening, people. Welcome back to another Crypto Sherpa video. I know I'm in a little different area to get a little bit more silence and just give you the news. All right, so in today's video, we got, let's see, Germany's institutional funds can hold 20% in cryptocurrency starting August 2nd, so that's in 2 days. Microstrategy continues to invest in the digital asset amid holding 105,000 BTC. Congressman takes aim at peers who think that crypto could cause a financial 9/11. And Bitcoin's recent recovery has a lot to do with this. So sit back and stay tuned. All right. I'm sorry you can see my fingers. I don't have my mouse with me right here. But let me share my screen with you so we can get into the news. All right, here we go. Germany's institutional funds can hold 20% in crypto starting August 2nd. August 2nd, little piggy bank over there. But yes, there could be a flood of institutional investments coming from Germany starting next week on Monday, August 2nd. A law is coming into effect that allows Germany's institutional investors under these special funds categories to invest in Bitcoin, BTC, and other cryptocurrencies. Institutional players like pension funds and insurers can access these funds together. These institutional players in Germany's manage a staggering 1.8 trillion euros. That's 2.1 trillion dollars American. The regulatory landscape for cryptocurrency is evolving fast, and more institutional players are joining the bandwagon. However, with the explosion in crypto market this year, lawmakers have been still taking a slow stand in the formulating new rules for cryptocurrencies. Speaking of this development, Tim Krusman, an expert on the crypto asset at BVI, Germany's fund industry bull, told Bloomberg, most funds will initially stay well below the 20% mark. On the one hand, institutional investors such as insurers have strict regulatory requirements for their investment strategies, and on the other hand, they must also want to invest in cryptocurrencies. So it all depends on the crypto market volatility. While it is certain that digital currencies have given outsized returns over the last decade, the extreme market volatility has prevented institutional players from joining, such players usually have a conservative approach to investing in assets with steady returns. Kamir Kazmarsky, a financial service advisor at a management consulting firm, Oliver Wyman LLC, said the initial participation in the crypto fund could be at a low level. He noted that most funds won't leverage the 20% threshold for at least the next 5 years. DWS Group, the asset manager for Deutsche Bank AG, has been continuously monitoring the development, but a spokesperson confirmed that they are not currently planning to offer funds that have exposure to crypto. Germany is another popular asset manager. Deka Bank has been willing to enter the crypto market and announced it could be soon made in this regard. So, there you have it, people. We could be seeing a big turn in events going on. But we also want to be very cautious because usually how I end my video with the crypto fear and greed index, I'm not sure if any of you guys ever made that. We're currently at a 60 in extreme fear. We are in the greed territory. Now that is a sign to be worried. So you may just want to hodl and see what happens. Because if you don't know, extreme fear can be a sign that investors are too worried. That can be a great buying opportunity, but investors getting too greedy, that means the market is due for a correction. So with this graph saying we are in the greed territory, so we should just tread cautiously. Next up, Microstrategy continues to invest in digital asset amid holding 105,085 Bitcoin. Yes, he owns a lot. The leading enterprise analytics platform Microstrategy released its financial report for the second quarter of 2021 Thursday and satisfied with the company's strategic investment in digital assets and will continue to deploy funds to invest in digital asset strategy. Michael J. Saylor, CEO of Microstrategy Incorporated, stated that the recent financing increased his company holding a Bitcoin, the mainstream cryptocurrency, up to 105,085 Bitcoins. Now that's a lot of Bitcoin. Now remember, people, there's only 21 million Bitcoin in the world. 5 or 6 million's gone forever, and we're at a circulating supply of about 18 million, almost 19, so we're almost completely mined up for all the Bitcoin in the world. And if this guy has 105,085 Bitcoin, that's one more less Bitcoin than you can ever have. There is at least 6 billion people on this earth, so you do the math. So when these big guys take up the Bitcoin, that's less for you to get. But Microstrategy LLC, a subsidiary of Microstrategy, holds approximately 92,079 Bitcoin. At the time of writing, Bitcoin once again stood at the psychological barrier of $40,000 and was trading at $40,018, according to CoinMarketCap. At today's prices, the business intelligence company MicroStrategy holds 4.2 billion Bitcoin in total value. The CEO of MicroStrategy, Michael Saylor, said that we continue to be pleased by the results of the implementation of our digital asset strategy. Our latest capital raise allowed us to expand our digital holdings, which now exceeds 105,000 Bitcoin. Going forward, we intend to continue to deploy additional capital into our digital asset strategy. This guy's a smart man. According to the second quarter of the financial report data, as of June 30th, the market value of Bitcoin is currently held by MicroStrategy on a non-GAAP digital asset cost basis and a non-GAAP AAP, which stands for Generally Accepted Accounting Principles, market value were respectively $2.741 billion and $3.653 billion. The cost of each Bitcoin calculated by these two accounting methods is only $26,080 and $34,763 respectively. MicroStrategy reported revenue for the quarter of $125.4 million, increasing 13.4% over the same period last year. The gross profit margin in the quarter increased from 78.3% to 81.6% over the same period last year, and the total gross profit margin was as a high as 102.3%. So crazy. Please leave a comment down below. Let me know, what do you think this guy's going to get in the very end? Because eventually all the Bitcoin is going to be bought up. Do you think he'll reach the 200,000 mark, or will he get to 150? So let's just see. What are your thoughts? Let's find out later. Next up, Congress takes aim at peers who think crypto could cause a financial 9/11, characterizing his contemporaries as viewing the crypto sector as a financial 9/11. Congressman Ted Budd has warned lawmakers against driving blockchain innovation offshore. Let's see, scroll down. Look at that, the White House with a big coin behind it. Representative Ted North Carolina, a member of the House Financial Services Committee and Congressional Blockchain Caucus, has argued lawmakers to embrace decentralized innovation on what appears to be the first occasion in which publicly elected officials has met with decentralized autonomous organizations, the DAO, but acknowledged the increasing concern about crypto among lawmakers while speaking to MakerDAO's Chris Cameron on Thursday. There is some on the Senate side and some on the House side which fear, especially when it comes to currency, the blockchain decentralized finance, and how it's going to evolve, he said. The fear is whether it will hurt our national sovereignty. Will it destabilize the dollar? Is it a threat to national security, he added. You even have some in the House that sit not too far from me on the House Financial Services Committee that would call blockchain basically a financial 9/11. Bud characterized his peers' concerns as short-sighted, warning that rivals of the United States could benefit if the local lawmakers take hostile and exclusionary stances regarding digital assets. I think we need to be very open to this. We need to make the U.S. the place where this technology flourishes, he said. It's a new technology that's going to evolve, and I'd rather evolve here in the US than in Singapore or Estonia or other nations that could be hostile to the US. I'd rather it be on our shores. So, responding to a question from Cameron asking how a decentralized entity can be engaged in lawmakers, but acknowledged that the many decentralized projects don't know who to call, who to reach out to regulators. There's a lot of innovation, but there's also maybe not coordination when it comes to government affairs, he noted. But urged Dallas to reach out and schedule meetings with lawmakers, but warned I would come and do not teach, and do not tech speak to the folks. If you can explain it really clearly, ask how they think about these things. Propose a question ahead of time, we are pretty accessible. So right here, we're just seeing the US is pretty freaked out right now about what's going to go down with cryptocurrencies because they know it will destroy their financial system. The dollar is dead. They've been printing fake money for over 50 years now since Nixon took the dollar off the gold standard in 1971. So if you think the dollar is going to go somewhere and they just keep printing more of it, think again. But yep, good news for you crypto holders. Keep stacking those sats. Lastly, we got Bitcoin's recent recovery has a lot to do with this. And what is this? Let's find out. The large market has tried. Oh no, stupid pop-up ads are trying to close you. The large market has tried to understand the value of Bitcoin over the past few years, but many usually fixate on the market price as an asset. Others derive something more fundamental, such as Bitcoin facilitating financial freedom. So true. Keeping in line with that, the network of Bitcoin, i.e. the blockchain itself, is equity important over time. Its value may have contributed to BT's price movement. Before diving into specifics, however, let us analyze the recent state of Bitcoin blockchain. The hash rate incident and difficulty adjustment. The crypto industry is notoriously known for its short-term memory, and many have forgotten the recent hash rate dilemma on July 9th. The hash rate dropped down to 88 EHs a second, a level that was the lowest registered hash rate since 2019. At press time, the same seems to be undergoing recovery, climbing by 50 over the past few days. In fact, the rate was back above 100 ETHs a second. Similarly, network difficulty also witnessed 4 periods of negative adjustments, something that hasn't happened since 2011. So both price and hash rate are seemingly heading in the same direction. Now, over time, there has been a predominant correlation between them. In fact, data suggests that whenever the price has been on an incline, the hash rate has not particularly picked up a similar trajectory. Now, under technical schematics, it makes perfect sense. When the price is on an incline, miners have more of an incentive in mining Bitcoin, and setting up mining operations during bullish rallies can be hectic. This is added in competition, and miners need to evaluate how long mining will remain profitable. That's so true. In line with the same thought, this is where Bitcoin's network value kicks in. The urgency to mine Bitcoin only arrives when BTC's price is maintaining a higher average. This triggers a rise in hash rate, something that has historically initiated strong bullish rallies. Bitcoin miner standpoint. Therefore, it can be inferred that BTC miners do remain extremely involved with the network value, and whenever they are capitulating or accumulating, it is also largely dependent on how valuable BTC network is at any given time. When miners begin to capitulate, it is a sign that they were witnessing a drop in inherent network value, which inadvertently lags BTC's price on the chart. Therefore, the network value of Bitcoin remains an important part of the BTC trend trajectory, with its current recovery only helping its cause for a sustainable climb up the charts. So there you have it. With its current recovery only helping its cause a sustainable climb in its charts. So it's slowly recovering. After that China ban of its mining, that's where that big hash rate dropped super low. But those guys just moved to Texas, and as a couple articles from earlier the other day, they were going to Russia. So just because you ban them in one country, it's not going to stop the Bitcoin network. This is going to be the new future monetary asset, and you better start stacking those sats while you still can before it's all run up. And to finish off, we're going to take a look at the current market price. Whoa, Bitcoin's at 41,779. Did not see that, so we broke that 4,000 mark. Ethereum's at 24,000 or $2,453. That's an increase of like 200 from the other day. Binance at 321. Dogecoin's at 20. No one cares. Sherpa's at 74. No one cares about that either because you work with the banks and you are centralized. Robert Kiyosaki from Rich Dad Poor Dad series taught us anything. Do not trust the banks and do not trust centralization. Move to a decentralized mindset. Litecoin is at 144. Loving that. Stellar's at 28. No one cares about you because you're just XRP, or basically Ripple, after their lawsuit was happening. Theta's at $5.89. Filecoin's at 50, and Tron is at 6 cents. So and there you have it, people. That is the current update of what's going on. I hope you got something out of this video. If you have any questions in the crypto world or just getting started, take a look at Bitcoin Consultants Worldwide. I'm a part of that team, so go ahead and look for Crypto Sherpa. If you're trying to get into the crypto world, we have tons of people on our team ready to go to teach you how to get started. We'll set you up with a wallet. We're get you set up on Coinbase, possibly even an over-the-counter exchange. And that way, we'll teach you how to buy, trade, and exchange cryptocurrencies, and as well as keeping them safe. So again, thank you guys so much for watching. Please give this video a thumbs up, like, and subscribe. And the Crypto Sherpa will see you tomorrow. Have a great